It's time we welcome our market master for the day. Vineet Bhatnagar, Managing Director of PhillipCapital, joins us now. Good morning, Vineet. Good to have you with us.
Thank you.
Well, the index at the moment is, at the index level, is showing a little bit of pressure, a little bit of saturation. And that on a day like this, when Asia is doing very well, Shanghai is up 2%, Wall Street was almost 1% higher. Do you think this month would be a month of profit taking, or is it just for a brief period?
I think what we have seen since the beginning of this week, there is clear signs of profit booking, and I guess that is how the market has opened even today. Although there were some very strong local domestic cues that all of us saw during the market and post-market yesterday. The 10-year bond yield going below 8 is a significant sentiment booster. Although the central bank governor did not come up with a rate cut. So I guess the going forward path is looking more and more predictable, and therefore the point that you were making just now about the potential beneficiaries are the ones that are doing well today is becoming quite apparent. So whether it is around the interest-sensitive sector, or it is around the defense or insurance-related candidates in the NBFC space, all of them are doing well. So I think the market has become a little more attuned to stock selection, but stock selection around an anticipation of a news around the sector or the stock.
Okay. Vineet, hi, morning. So by the end of this year, what kind of Nifty level would you be looking at in terms of when this contract ends? I
think the way I'm anticipating is the following, that there could be a brief period of correction that we may see today or for the rest of the week, which should not take Nifty below 8460. If it were to go below 8460, I think there is another possible slide of 50 points. But no further than that is what I am forecasting. Thereafter, it should scale back if it is supported by global cues and also from the winter parliament session in terms of the news bites that are coming out from New Delhi. It is quite possible that the second half of this month would allow us to see the taking away of 85.70 and move towards 86.30. I think that is how this particular month could end.
Okay, can you analyze for us the FII action at this point in time, and more importantly, normal Decembers, how do they react?
I think normal December is actually a tricky month in the sense that there is a combination of not full strength on the trading desks, because people start moving away as far as the regional and the global FII traders are concerned. At the same time, this particular trend allows liquidity sometimes to be on the ebb, which in turn could actually amplify price movements on either sides. At the same time, this is also the month which is a quarter end, and for many a year end. Right, so anything that one wants to print in terms of their annual performance, quarterly performance, it is a momentous month as far as 31st December is concerned. So a combination of all this would make me believe that Nifty should be 86.30 rather than 84.60.
Okay. Well, just to add on to that, I mean, how do you interpret these two numbers? FII's net sold 1,200, 1,300 crore in index futures yesterday, and they net sold index options as well, about 600 crores. Should net sale in futures be seen as negative?
I think the overall bias of the future open interest as far as the FIIs are concerned is still longish. At the same time, there are trading desks of FIIs or the proprietary desks of large banks who do participate in the F&O segment in India, where the positions are really very short-term oriented. It could be just a day trade or just a 2-day trade. So I would not look too much into what numbers that you just shared with me. I would only look at the fact that the overall open interest is looking bullish. There is a positive bias, although the call distribution at 8600 and 8700 strike for Nifty is the considerable number that I would consider.
Okay. Let's talk about individual stocks now. In fact, Vineet, the theme this year has been domestic growth. So whether it's SBI, whether it's Asian Paints, whether it's Maruti, all are the beneficiaries of an improvement in the domestic economy. Would you continue to play this theme? And if yes, what would top your stocks now?
I think that should continue to be the theme. Also because the benign interest rate reality, not the outlook. I think we have been living with that outlook for a few quarters now. But the benign interest rate reality is around the corner. February and April are only the two toss-up as far as the first interest rate cut is concerned. There is a consensus on the street that as much as 100 basis point rate cut is possible in the whole calendar year of 2015 from the central bank, and therefore the spurring of the economic activity, both in terms of the demand as well as the kickoff of perhaps the capex cycle, would still lend me to play the domestic cycle better. Also supporting this particular theme is the fact that there is little growth that is visible in mainland Europe right now. Right, US is still clocking some positive numbers in terms of the growth numbers, but I would still believe that as a large domestic market, we would still relatively be focusing more over here. The rupee outlook also is positive, so we are looking at actually a stronger rupee.
So what would be the stocks to play?
So the stocks to play, according to me, will still be very selective, in the sense that I would play banks, because some of the banks selectively are looking good. Private banks are always the top picks, but some of them, even in the PSU sector, are looking all right. With a very short-term view, we had come up with names like Lakshmi Vilas Bank, Federal Bank, City Union Bank, because of the M&A related activity that may get announced. On a more sustainable basis, names like Union Bank, Allahabad Bank are looking all right. So that is one sector to play. There is also the all-time favorites in terms of the defensives, which may look good, which is coming from names like Marico, names like Asian Paints. There is some positives that could come out even in the IT sector as far as the large caps are concerned, because the growth in the US, which is the largest geography, is still looking stronger. In pharma, I will pick up names like Ipca Limited. There could be a positive news that could come out from Ipca. We still like Ajanta Pharma because of their niche marketing model or business model. So there are a host of names, combination of FMCG, demand, as well as defensives, the so-called defensives that we will play for 2015.
So you're still bullish on the Nifty and you expect 8630, as you said, rather than 8460. Then what are the Nifty outperformers and what are the Nifty underperformers?
So I think this continued strength obviously is visible in ITC. In also, I think it could come around in TCS because of a large order that is being talked about from yesterday. There is also confidence that is there, as far as some pharma names are concerned. So I would imagine SBI would obviously continue to look good. So these are the sectors. Even within the Nifty components that should look positive. I think the negatives, on the other hand, will look like a shorter list. There is an overall pressure on the commodity segment, so there should be limited upside that one could expect in names from the metal sector. Outside of Nifty, from sugar, also in names like ONGC because of the falling crude. So I think that's so those would be the laggards.
Right. Well, there's some news on Pratibha Industries. I just want to pull up that stock for a second. Crystal has downgraded Pratibha Industries ratings to negative. So that stock is under quite a bit of pressure, now down almost about 6%, and big volumes getting traded. I don't have any more information, so I'm going to try and dig that out. But in the meantime, just watch the move on the stock. Are there any stocks that you would avoid completely at this point?
I think I will be more cautious about the commodities, because there is a complete, there is not only an overall global commodity softening kind of a regime, but the harshness with which some of the commodities have fallen, led by crude, will make me very nervous about taking long positions in that sector.
All right, Vineet, we'll have to leave it at that.
Thank
you
you
very much for joining us in
pleasure.
the studio. But before you go, disclosures, now new SEBI rules.
I have no personal positions in any of the names that I spelt out. However, as a sell-side research outfit within the broking business, we do have recommendations on most of the names that I shared this morning.
All right. Thank you very much for joining us.